Welcome everyone to another episode of Let's Talk Special Economic Zones. I'm your host Ainsley Brown. I am the Senior Director with responsibility for regulations, policy monitoring and enforcement at the Jamaica Special Economic Zone Authority. In today's episode, we're going to cover investing in a special economic zone. How does one exactly invest in a special economic zone? And that will depend, of course, on the jurisdiction in which we're referring. I tend to focus, of course, on Jamaica, but you'll see that there are many ways right across the board, depending on what the law in a particular jurisdiction allows for. So you can, of course, there are, potentially restrictions on foreigners investing, and you'd have to check that to see if there are restrictions. Of course, there's also may not necessarily be restrictions, but encouragement or incentives or inducements for locals to invest. In Jamaica, we have an equal playing field. Both foreigners and locals are equally entitled to invest in special economic zones. So there are different forms that can take. You can it's not prohibited, or it's allowed in Jamaica, for example, for a zone to be listed on the stock exchange, and we have a few that are listed on the stock exchange. So then you can have a variety of equity holders, shareholders that can invest in the zone. And what's the size of the shares and all of that? Again, that will depend on what you want to do, and also the regulations or rules around how shares are issued. You can, of course, have a partnership agreement that governs how you enter with two or more parties that decide, I think I want to invest in a zone, say Jamaica, and you sign a partnership agreement to say this is how we are going to work together. Then in Jamaica's language, SEZ language, that would make you the sponsor or sponsors of the project. And then you incorporate a company to whether you want to become a developer or become a occupant. Developer, of course, is one that develops the zone. You can either be a multi-user zone where you yourself will recruit and have occupants and other zone users, or you could be a occupant where you go into a zone, a multi occupancy zone. So with that partnership agreement, you then decide, of course, you're going to go forward. Let's say you're going to go forward with a developer to be a multi-purpose developer. You would incorporate a company and then divide the shares. The partnership agreement, of course, would govern how exactly those shares are to be divvied up and what the investment or share capital will be. Like, what exactly are you bringing to the table? Will you be bringing cash? Will you be bringing expertise? Will you be bringing land? Will you be bringing equipment? And then you convert that into share capital. And that will be paid up and issued share capital. So that's one way that you can invest. Of course, there are institutional investors such as pension funds that can invest. That is something that we're actively pursuing and actively encouraging in Jamaica, for example, where they can either purchase, which they tend to do, purchase existing SEZs, because they would have shown, or existing developers. They tend to focus on developers, multi-occupancy developers. They would focus on them because they already have a proven stream of income. They would have rented out, for simplicity's sake, they have 10 units within the zone. They would have rented, say, 8 out of the 10, and they would be collecting rent from that. So that's a proven revenue stream which they would want to buy into. So there are different models that can work. You can also be a landlord rather than be a developer. So you could put up your land. So it's not a direct investment in an SEZ. You could put up your land and say, yes, I would allow an SEZ to be built whether it's a refurbished building or a repurposed building or a greenfield operation. But that's an indirect investment because technically you're not really part of the SEZ. You're allowing the SEZ to be there. There's also other models whereby, similarly again with the pension funds, and it's not exclusive to pension funds per se. It can be banks and other investment houses. They could, or even a group of individuals could do this. They could buy the zone and then lease back. Of course, most zone authorities, zone regimes have restrictions placed on who and how this is to happen, because when somebody applies, they would have been reviewed and authorized on that basis. So now you're introducing some new parties, and due diligence would have to be done on them, and then approval given for that transaction to proceed. In Jamaica, if you do that transaction before seeking permission, the law says that the transaction is actually void. So it has serious implications for not following the proper process and procedures. So you could, as I was explaining, that you could, those parties could come in and buy the zone and then lease back. So with that, there's two different options that can happen. The new owners could step in the shoes and become the developer. And then they could enter in some sort of arrangement with the previous developer to become an occupant and then be the property managers for them. So they would run the zone. So the already existing occupants would see no real commercial disruption. The other option is that they remain outside and not become part of the structure. So the existing developer, would remain as the developer. However, the land is owned by someone else, which is perfectly permissible, because you could have leased the land in the initial stage and then applied to become a zone. So again, this is Jamaica, and there's an assumption that this is permissible in other jurisdictions. If it is not, then you'd have to work within that system. So the point is, there are many different ways in which one could invest in a special economic zone. So if you found this interesting or entertaining or educational, please like, share, and subscribe to the channel. Bye for now.